Welcome to Forex Masterclass Module 6. Here, we learn how to earn Forex money with ease, and this section is going to be facilitated by Forexvpn. Welcome back to Any Forex Money with ease. Today, we are going to be treating Wyckoff Forex Analytics. These analytics has helped a number of traders on the advanced level of reasoning to improve their profitability from a very lean number to high digit number to 80%, 90%, and even 95% profitability. And this Wyckoff Forex Analytics can actually be applied also with your smart money strategies. So let's look at Wyckoff Forex Analytics and see how to use it to improve our trading experience. You can see Wyckoff price cycle here, starting from accumulation area, an area of oversold level, and then pumping up to a markup area where you have demand greater than supply zones, and then it could move upward to an overbought area where you have supply greater than demand. This markdown area are areas where people start selling down. It can precede an area of distribution. You can see distribution area around here, where the market is being distributed, and then you have a markdown. So this is the kind of general overview of what David Wyckoff is trying to teach in Forex Analytics. So let's see how this is actually applicable to all the signals and setups that we have been using at Top Forex Academy, and how you as students of this academy or as members of this community can improve your Forex trading. Remember, we are here to empower traders and also influence the future for better profitability. Smart money can actually apply this Wyckoff so as retail traders. But most importantly is that this strategies is good for everyone, and you can blend it with your smart money strategies to improve your overall trading experience. We want to quickly look at this material together and break it down for you. We'll look at it under 15-20 minutes and break it down for you and see what we can achieve in this short time frame so that we can become a better trader. You can see, according to Wyckoff, the markets can be understood and anticipated through detailed analysis of supply and demand zones, which are certain from studying price action, volume, and time. We have already said it before that when you want to trade in the market, look at your charts. In your chart, you can get price action, you can understand the time, and also you can trace the volume of commodity traded per day, and that can give you a better understanding of the price or of the market that you are trading, whether you are trading GBP, USD, or you are trading Euro USD, or you are trading any other currency like Aussie, Stocky, Loonie, Fiber, Cable, and so on and so forth. So as a broker, Wyckoff was in a position to observe the activities of highly successful individuals and groups who dominated specific issues. Consequently, he was able to identify how they trade. So that is what we want to teach you today, to see how successful traders, successful groups of companies, institutional traders trade and bring out the best from the market. So please come with me as we go through this material. So you see there are 3 laws of Wyckoff. Okay, so the first law is the law of supply and demand. This determines the price action. The principle of central Wyckoff methods of trading and investing is based on demand and supply. When demand is greater than supply, price rises. And when supply is greater than demand, price falls. So those are the things you need to understand. Okay, so the law is deceptive simply because of what you learning to accurately evaluate supply and demand on bar charts to understand the implications of supply and demand patterns takes considerable practice. That's why we tell you to practice more and more, because you will not know exactly what is going on if you don't practice and repeat these exercises. Another law of Wyckoff is the law of cause and effect. All right. So if Wyckoff is telling you that something is going to happen, or if the market is showing you that something is going to happen, a trend, something would actually cause that to happen. So this law of cause and effect helps traders and investors to set price objective. You gauge the potential extent of a trend emerging from a trend ranging or whatever is going on. So you want to have a point and figure chart. All right. So when you look at something, okay, so okay, this is what is happening. This is the effect. This is the cause. This is the reason. That's what guides Wyckoff. Another law that guides Wyckoff is the law of effort versus result. All right. So this provides an early warning of possible change in trend and in the near future. Divergence from volume and price often signals a change in direction of a trend. Okay. So for example, when there are several high volume, large efforts, that means large efforts. But when you have narrow range price bars, after a substantial rally, with the price failing to make a new high, little or no results can come out from that. So this will suggest that big interests are unfolding. So if you see that there is no much price volume, there's no much effort in the market, you see that many people are pulling out of that market and that market might fall. So these are the three laws that is what guiding Wyckoff. So we are going to be seeing the analysis of the trend range, Wyckoff schematics. Wyckoff schematics is what we want to learn today to see how we can apply that to our to our trading. So let's go ahead and look at it. So we're going to look at it here under Wyckoff events. So you see what we look at under this Wyckoff event. We look at the accumulation schematics. All right. So that's Wyckoff events and phases. What are the phases and the events in a Wyckoff schematic? So here you see this is a preliminary support, and this is what selling climax. This is automatic rally. This is a second test. So if you look at this thing now, it's showing you that price is trying to go up. The overall trend here is price is reversing upward. I want you to understand that the overall trend in this very Wyckoff schematics, that price is trying to reverse upward. But before that, there will be a lot of phases before that will happen. And when you want to study this kind of thing, you come to a lower time frame. Perhaps you've seen a reversal or you're spotting a reversal on a bigger time frame like H4 or a D1. Then you can scale down to a smaller time frame like H1 or M30 to understand Wyckoff, to see what is playing out in each phases. So in the first phase here, you might see a PS, that's the primary support, a selling climax, and then the price might push up to automatic rally, come down to a secondary test, and then go back again. And then you see another second test in phase B. You are now in phase B now. Then you keep having this going up, going down until you come to this point, a spring. This spring is lower than the second test in phase B. All right, it's lower. So just like you sitting on a pin or a spring. If you sit on a pin or a spring, what happens? You jump up. So when you see this type of schematics or this kind of occurrence here, is giving you a kind of a confirmation that this price or this market is actually going to pull up. All right. So after this spring, you see another short test. Then you see Wyckoff trying to do a fractal movement upward. Okay. So at this point, you see this is your last support, and then you see this marking your SOS. That's your strength, the strength of the pullback, the strength of the reversal, showing you that we are actually going that direction. Now, for those that are doing smart money, you will see that this is like a break of structure of this point. Initial secondary test goes up to this point, and our SOS now is higher than this. Like I was saying, you see that this sign of strength is higher than the structure, okay, printed by this secondary test. So that is showing you actually that there's a break of structure of this, showing you a positive sign that Wyckoff is actually going to play out completely to the upper side. So when you see this is like a backup or your last point of strength, okay, around here. You have one here before, but the second one here, you can call it a backup, trying to give you a strong support to rely on before moving up. So when you see this type of thing playing out as a buyer in the market, you want to enter your buy action around here. you want to enter immediately around here, this might be your point of mitigation, your zero mitigation, okay? And this is your it might be up to 80% mitigation or even more. As a buyer in this market using Wyckoff schematics, you want to just enter from around here or around here, and then you want to make sure that you lock in your stake for a buy. So you see Wyckoff now playing out completely, and the market was scaling up. This is one accumulation schematic for Wyckoff. Now, accumulation schematic is used for buy action. All right. So let's look at another accumulation schematic, maybe number 2, for another buy action that might occur in the market. Then after that, we'll look at other schematics for sell action. So this is schematic 2. So you look at, it looks like almost what we have before, but a little variance in it. So here, this is what? So just a little variance in it. So this is your what? Preliminary support. This is your selling climax. Climax here means the last point for sellers to come out. So if you're not coming out here, you might not be profitable. So sellers need to come out here, and then goes up to have automatic rally, a secondary test, and then you have this. Then you have this secondary test in phase B. Then the market keep going fractal until we have this last point. Until we have this last point, and then we go again, still we bring out the SOS, that sign of strength. Always observe that your sign of strength should be higher than the point printed by the secondary test. All right, that's signaling what? A break of structure, just like I said in the first schematics. And then you have a back up here, which is showing you a time to go into the market. So because once you have this break of structure, you always want to wait for a pullback. All right, so at this point you have a pullback, that's your backup, and then you can enter your buy here. And then what happens is that you begin to what? Go ahead into what? Profit. You begin to go, yeah, you begin to circle in pips and profits from here. So that is simply Wyckoff schematic 2. Let's look at the other schematics that we have in the markets. Before then, I would like to talk about the phases so that we can actually understand what's going on in these phases. So you can see that phase A actually marks the stopping of the prior downtrend, just like this point. See, this is, like I said before, this is our what? Preliminary supply. Don't make sound now. Traffic hijack. Don't make sound. This phase is a preliminary supply where people did supply, and then this is our selling climax. So this phase is marking the end of what? Of supply zones or of buying pressure of downward trend. This phase is a form of accumulation where phase B, where price just range and accumulates. Okay, this phase is a phase that is preparing the market for the upward trend. Why this phase is showing a source of strength where you try to what? To lock in your buy, and this phase is where you break the resistance zone and you are moving towards what? Upward trend. So those are the phases. Those are the 5 phases that you are actually looking out for in accumulation schematic. Now let's go look for the distribution schematics. Okay, so in this distribution schematics, we are looking out for sell opportunities. So it's just an opposite of the accumulation schematics. So this is the first schematics for distribution. you can see that in phase A, it marks the end of buying pressure, the upward trend for the market. You can see here we have our preliminary what? Supply, and then here it goes up to a buying climax. In the other place, we have selling climax. Here we have buying. In the other diagram, in the other accumulation, we had selling climax. But here, since we are looking for a selling opportunity, we have a buying climax. So no, after this buying climax, you should not be looking out for what? Buying opportunity anymore. So here, after the buying climax, we have what? Automatic rally, downward, secondary test, and then here you have the source sign of weakness, showing you that this price is really weak and something might happen. Okay. Then you go here to where this is your ultimate this UT is just like your spring. It's the opposite of your spring. So we call it ultra. Let me check. Upthrust after. This is our upthrust. Okay. Sorry, I'm just trying to get their full name because we are recording. This is our upthrust. And then you have upthrust after distribution. Okay. So this upthrust after distribution is just like your spring. But here now, this is the opposite of it. This is telling you that the market is going to push downward. But if you don't understand this, you might want to buy. And that is a bad decision for you to make. So you can see here that the market comes down here. Now you have, what do we have here? We have supply, we have the low price for supply, and then here you have another source of weakness. This source of weakness is like a brick of structure to the initial source of weakness here. And then you see an opportunity for you to lock in your sell around here, and then to begin to sell. So this is obviously a distribution schematics for Wyckoff. Let's look at the second schematics, and then we can understand that it's just a variant of it. You can see here, this is our selling. This is our selling what? This is the preliminary supply, and this is the buying climax. This is automatic rally, sign of strength, sign of weakness, secondary test, right? That secondary test here, sign of weakness, automatic thrust in phase B, and then you keep coming. Sometimes you might not have another automatic thrust, but when you have another automatic thrust, that is, you call it automatic thrust after distribution. That is UTAD. But when you have only one, you can just call it UT. Like in this variant, we have only one UT. And then you keep having distribution like that. Immediately you see that there's no other higher UT, then you take it as second variant like this, and you keep having what? Distribution like this till the markets show you another sign of weakness, and then this is where you lock in your sell. Okay, so these are the things that we see in the market before we actually confirm every setup and send it to you in the VIP. So I want you to also look at it. I'll give an assignment for you now to go back, draw these schematics for both distribution and accumulation, and then identify all these terminologies, be able to know what they do, also split the phases, know what the phases are. Like this phase now is the end of buying pressure. Why this phase A, this phase B, and this phase A is the end of buying pressure. Why phase B and phase C is an accumulation zone, okay? And phase D is place where you see the sign of weakness, confirming that you are meant to go into the what? Into the market as sell. That's where you lock in your sell. And phase E is where you begin to rake in your profit. So I want you to understand that, because if you don't understand that, you might be deceived and begin to go and buy around this point, when you see this UT, you might want to take, when you see this UT, you might want to take it as perhaps a break of structure, and then you might want to go up. But if you understand Wyckoff properly, and you have seen this buying climax, you have seen this buying sign, and you've seen this buying climax rather, and all of this playing out, you'll be able to see that this is Wyckoff testing you. And once you pass the Wyckoff test, you can actually have good pips running for you. So let us use this very chart to further explain what we have been saying. So this chart will bring to focus everything I've been saying, and we're going to end with this. Please, if you understand this, and if you have questions for me, try to drop it in the comment section. Like this video. If you don't understand it, whatever that is not clear to you, put in the comment section. For those that understand it, start doing your assignment. I'm expecting this assignment in the next 2 days. So you have 48 hours to draw your Wyckoff schematics to say what it does and what it does not. Also tell me what schematics is good for buying, what schematic is good for selling. How do you identify it in the market? So right now I'm going to show you how to identify it in the market. So when this market now is a market for Apple against US dollar. So you can see that here is what is signifying this, the selling. You can see here that is showing the supply and demand analysis. And then you can see what we have explained during the diagrams, that eventually the market pulls and goes up to buy. So that means that here we can take here as our selling climax, and then we can take here as our automatic rally, here as our as our spring. So you see all this. Sorry, here you can take this as your supply. This is your supply. This is your selling climax. This is your automatic rally. This is your, let me fetch the supply. Let me fetch the schematic again. Are you with me? So that very chart can be compared to what we have here, and I'm going to pick it one after the other. So let me go back to the charts. Very good. So you see here, we have our selling climax here. Okay. And then here we have we have our automatic rally. And then here we have our secondary tests. Okay. Goes up, comes down again. This is sign of what? This is another secondary test in phase B. Okay. So, and then you keep going. You keep going until you have a spring. You can call this a spring. Okay. So if you take it in reverse again, we can say our selling climax, automatic rally. Then here is our ST in phase B. Then here is our spring. So the last push before the upward trend is a spring. Okay, but because this is a real market, it might not go exactly like the theory. So that's why practice helps you to actually figure it out. So this is a spring, and then you keep going. This is a test, and then you keep going, keep going. This is a sign of strength here. Okay, this is a sign of strength here, or you might use this against this as sign of strength. Okay, you can see this is a break of structure to this structure. And then if you go down, you can see this is a pull back up. Okay, so around here, buyers are looking towards to come in. So for those that want to apply smart money, you might draw this out as your order block or area of support, area of interest, which is also marking your area of support. So if you mark this out, okay, you might want to just make your buy around here, and then you keep going up and the market keep going up in your favor. So that is the kind of thing you have playing out in the market. And after you get to the climax here, you might also begin to play out another Wyckoff in the opposite direction for a sell action. Okay, so we have come to the end of this video. If you have any question, please, this is the time for you to start asking. This is time for you to start liking the video and share the video. Thank you very much. What time frame is the best? Good. All right. If you look at my screen here, you see that this point here is a demand zone. A demand zone is a place where the markets have, where the market is pushing up. That's a demand zone. At that point, demand is greater than supply. Okay. So that's why you have this. So here now is a supply zone where supply is higher than demand. So that's why there's a markdown. So when you have a markup, that's a demand zone. Have a markdown, that's a supply zone. Okay. So this is a recap for us to see what we have explained in Wyckoff. So supply and demand analysis is anywhere you see price pumping up is a demand zone. Just like here is a demand zone. Here is a supply zone. Okay. And this is another demand zone. Okay. If you rule this line against this line, you see that they have something in common, and that makes them a demand zone. Each time price come here, it goes up. Each time price come here, it goes up. So that's how to see demand zone. So what we do is that we always want to mark out our order block. The order block, which is a candle, help us to spot zones. So when the market is actually going up, the last candle before the markets continue going up is called order block. Look at this very candle now. That is the last candle before the market continues going up, right? So this candle is the last candle, so it's our order block. And if you rule it, you rule a line on it down, you see another candle also doing the same thing. The market is actually interested in going up, but you see a retracement down. So the last candle before the market start going up is the order block. So this order block and this order block here, they match each other. So if you rule them together, it forms your area of interest for demand. So if you have marked this before, by the time this one comes, you just place your trade here and start buying. All right. But because you want to apply Wyckoff, you wait and see this as what? A spring. See this as a spring, and then allow Wyckoff to play out until you see a pull